Hi guys, welcome to Tax Planning on the Whiteboard. I'm your host, Jeff Montgomery, and on today's show, we are going to go over the 2025 tax summary. We did this last year for 2024, and it was one of the most popular downloaded items on our YouTube channel. So I encourage you guys to check out the show notes and go ahead and download your own personal 2025 tax summary guide. It's very robust this year. I have a example here, two-sided, a lot of information. Just keep in mind that this is for information and education only. I don't want folks to run out there and start doing tax planning strategies on their own. Make sure you consult your own CPA or your own financial advisor before jumping into any strategies. So without further ado, let's get to tax planning on the whiteboard. Okay guys, what we're going to do is let's just jump right into it, go right to the whiteboard. And what we're going to do is we're going to look at the first section here is the tax brackets for 2025. And what you'll notice here is obviously the actual tax rates do not change. However, the taxable income brackets inside have actually expanded about 2.8% if you do the math. So for example, let's go ahead and just circle the 24% tax bracket here. And if we look at the new 2025 range, it goes all the way up to $394,600. Just for reference, last year that same bracket of the 24 range went up to $383,900. So a 2.8% roughly increase there. Now, if we take a look at, for example, capital gains rates, and let's just, the most popular is the 15%. That's where most people fall into capital gains rates. You can see that that 15% bracket in 2025 now goes up to $600,050. And last year it was $583,750. And then one more, let's go ahead and look at the single bracket. Single bracket, we'll do 24% again, goes all the way up to $197,300. And last year that 24% tax bracket went to $191,950. Make sure you download the guide and you guys can see these tax brackets on your own. Now, keep in mind that is taxable income, okay? That's not your gross income. That's not your adjusted gross income. That's your taxable income that applies to these brackets. The next thing let's take a look at, and I thought something that was very interesting was on the standard deduction. In 2024, the standard deduction was $29,200. It did go up $800 this year. So now, married filing jointly, you have a standard deduction of $30,000. Now keep in mind, if you're over 65 or blind, you have an additional $1,600 each that you can add on top of that. So $33,200 total if you're over 65 or blind. And if it's a single bracket, the standard deduction is $15,000. Okay, last year it was $14,600. And then if you are over 65 or blind, it's an additional $2,000 for a total of $17,000 standard deduction. And we've talked about this in the past. With these deductions being so high, the standard deduction, there are very few folks that actually itemize today. But you might want to just be safe and run it both ways if you're kind of close. And there are some tax planning strategies if you are close to consider, especially if you are charitably inclined and you wanted to get into that itemization world. State and local tax deduction limit. Okay, that's commonly referred to as the SALT tax. It has obviously not changed. There is a cap of $10,000. Now, we don't know what's going to happen this year. There are rumblings of the actual tax cuts from 2017 getting extended. So we'll see if that plays out. They are set to expire this year and go back to the way they were in 2017. So we'll see how that plays out. But there's also some pushback here on high property tax states. They want to increase this SALT tax cap Some want it actually unlimited. Some are settling around the $100,000 range. So right now there is a $10,000 limit on the cap. That obviously has not changed from last year. Let's talk about IRA contributions, and then we'll jump into some employer plan contributions as well. So the interesting thing here is the amount you can put into your Roth IRA. Obviously it's based on earned income. You have to have earned income. But if you're under age 50, is $7,000. That has not changed from last year. So that stayed the same. And if you're over 50, there's a catch-up contribution, age 50 and over, $1,000 catch-up contribution. So you can put $8,000 in that situation. Those numbers did not change from 2024. Kind of strange. Now, some things did change. Let's talk about if you have too much, or if you're making too much, according to the federal government, in adjusted gross income or modified adjusted gross income. A lot of times they are similar, adjusted gross income and modified. However, not all the time. But when you're looking at deducting your IRA contribution, keep this in mind. No matter how much you make, you can always contribute to an IRA. But the question is, can you deduct that IRA contribution? And if you look here, married filing jointly, we go up to 146,000 AGI. Married filing separate, it's only 10,000 AGI. And by the way, this is if one of your spouses is covered by an employer plan. So keep that in mind. Now, on the Roth contribution eligibility, this actually went up a little bit. So this new year, the modified adjusted gross income limits is 246,000, married filing jointly, single it's 165. And just for a frame of reference, last year it was 240,000 modified adjusted gross income. So it's up $6,000 this year before it phases out and they won't allow you to contribute to a Roth anymore. And for single, it was 161 and it is now 165. So some positive changes on the phase out of the Roth contribution eligibility brackets. Now, one last thing I want to talk about, and then we'll call it quits for this video, is the gift and estate tax exclusion. That did bump up a little bit. So now we can give away to any person, doesn't have to be a family member, we can give away up to $19,000. Married couple, you could each give away $19,000, and that will obviously lower a potential future estate tax burden. Now, that $19,000, that doesn't even have to go in your tax return. There are no taxes involved when you're giving away money if you keep it under the $19,000. Last year was $18,000, so they gave us a $1,000 bump for gifting to really anybody. It doesn't have to be family members, but typically we think mom and dad helping out the kids, right? Now the lifetime estate tax exemption is now $13,990,000. Last year it was $13,610,000, and that is per person. So you can kind of do the math, almost 14 million each. Married couple, almost 28 million, that they would not be subject to any type of federal estate tax. Make sure you check your own home state, because some states do have an estate tax, and there's also a few states that have an estate tax and an inheritance tax, two different things. And those amounts may not match the federal government. So make sure you check with your individual state. So that's it, guys. That's a brief summary. Make sure you download the guide. Make sure you give us a call or shoot us an email if you have any questions at all. Hit that subscribe button if you want some more of these videos. And then we'll see you next time on Tax Planning on the Whiteboard.